All right. Good afternoon, everybody. Uneducated Economist here. So I was just going through a little bit more of this Q&A session at the Harvard University with Powell. And I really have to thank, man, this is one bit of a bombshell that he had dropped here that I don't think anybody had heard. Now, he was talking about inflation expectation, the locking in of 2% long term, and then how it is that people are reacting to the inflation expectation. And he admits something that I think a lot of people who really understand the Federal Reserve, the monetary policy, and what it means to have an elevated inflation expectation as opposed to a long-term locked-in inflation that is very low. But just listen to what he has to say here and listen really carefully because it's so good. I mean, like I said, it seems to me like it's a bombshell of an admittance that I don't think anybody really heard. Let me see if I can cue it up here. All right. It's about 42 and a half minutes into the video. Let me see if I can cue it up here.
By sticking to our jobs and doing them well. Ultimately, if we deliver the maximum employment and price stability, or at least are seen to be doing everything we possibly can as we meet various shocks and multiple supply shocks in recent years, the public has faith in us. And if you look, we look at things like longer term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this.
Right? So long-term inflation expectations pretty well anchored in at 2%. Like that's not something anybody questions. Everybody sees it. Yeah, we see long-term inflation at 2%. It's elevated now, but the long-term, yeah, 2%.
So if you really think inflation is going to be higher, you can make some money betting against that, but people don't do that.
If you think inflation is going to be higher, you can make some money betting against that, but people don't do it. Did you hear what he had to say? Like that to me was just admitting right there that most people misunderstand what it is that they are going to do with this and elevated inflation expectations. Like, let me play it again. Man, it was so good. When I heard that, I'm like, man, that is like an admittance like none other.
The people meet various shocks and multiple supply shocks in recent years. The public keeps its faith in us. And if you look, we look at things like longer term inflation expectations, and you'll see that they've remained pretty well anchored right through all of this. So if you really think inflation is going to be higher, you can make some money betting against that, but people don't do that. The people.
People don't do it because they don't see it the same way. They don't see inflation the way that the Federal Reserve sees it. They don't see it in the way that the high-level investors out there who are actually understanding what it is that the Federal Reserve is doing with their with the inflation expectations and how it actually benefits monetary policy. Let me play one more little clip here for you guys. This is queued up just before the 47-minute mark. So I'm going to take this to like 47, say, I'm sorry, 46 and 45 seconds. 46, 45 seconds.
With the inflation below target. And that was at a time of QE and lots of fiscal stimulus.
Actually, let me back it up a little bit further.
With that.
This is at 46 minutes, 36 seconds. 46 minutes, 36 seconds.
Possibility for the economies at any given time is so much broader. For example, the pandemic inflation, we'd spent 15 years with the inflation below target.
We spent 15 years with inflation below target before COVID. That's quantitative easing, 1, 2, 3, and 4, failing to produce the inflationary scenario. He is admitting that right there. 15 years of below target inflation.
And that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target, and people pretty much, the profession had, the big problem the whole profession was trying to solve was how do we get inflation up to 2%?
The whole problem the profession was trying to solve was how do we get inflation up? Right? Like, how many times have I tried to share this information with you guys? He admits it here. 15 years of failure. All that quantitative easing, all that money printing, all that supposed inflationary pressure coming from all that money printing and quantitative easing, and the entire profession was trying to figure out how it is that they can get inflation up. Let me play it again. It's just incredible to hear.
That was so not a normal distribution. The tails are fat, and however fat you think they are, They're fatter than that.
So he's talking about the previous
possibility
subject
for the economies at any given time is so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target. And that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target. And people, pretty much the profession the big problem the whole profession was trying to solve was how do we get inflation up to 2%? That was really the problem. And then along comes the pandemic inflation and bang, suddenly you have a year high inflation. So,
bang. All right. Professionals problem solved. Right? This is what ended up happening. It pushes the inflation much higher. And now the problem that they had with all that money printing, not creating an inflationary scenario over the previous 15 years, the professionals trying to figure out how to get an inflationary scenario. Pandemic solved the problem, 40-year high. Yay, pandemic. Saves monetary policy. Powell admits it. He admits it right there. I don't know how many people hear it, but that's what he's doing right there. He admits it. 15 years of failure solved by the COVID pandemic.
It's up to 2% and lots of financial, so much broader. For example, the pandemic inflation. We'd spent 15 years with the inflation below target. And that was at a time of QE and lots of fiscal stimulus and that kind of thing. We had inflation below target. And people, pretty much the profession the big problem the whole profession was trying to solve was how do we get inflation up to...
The whole problem the profession was trying to solve is how do we get inflation up?
2%. That was really the problem. And then along comes the pandemic inflation and bang, suddenly you have a 40-year high inflation. So it's hard to keep your mind open to just how broad the possibilities are.
How broad the possibilities are to get your inflationary scenario. I don't know how many people see it. If you don't see it this way, then what are you going to see it as? Right? How are you going to look at it? You're going to look at them as somebody to blame, somebody to say, hey, man, they're causing all this suffering upon the people. And, you know, it's terrible for the working class and it's awesome for the rich. And people can constantly share that. And Powell's over here going, you know what our major problem was is that we couldn't have inflated. We couldn't find it. It was 15 years of failure, even though we had all this massive stimulus and quantitative easing. We couldn't do it. But COVID came along and bang, all right. Inflationary scenario.
Okay. Take down here, yes.
Let me run it towards the end. There is a little bit talking about the balance sheet, and I think that's probably a pretty good topic to kind of continue on with. Let me see if I can find it here.
Series of supply shocks. First the pandemic, then the much smaller. We're getting now an energy shock. No one knows how big it will be.
Okay, well, actually, this is a good spot because this is talking about the continuation of supply shocks. It's always, like, that's what I said, as long as you can keep the supply chain broken. Now, listen to what he has to say here. Let me back it up a little bit.
And also because what was implemented was less than what had been announced. Nonetheless, that was the piece. We were at about 3% inflation, and somewhere between 0.5 and 0.8 of that is from tariffs. So we've been pretty close to 2% all this time. Now we have another supply shock coming. You know, it's one of those times where you get a series of supply shocks.
One right after the other, series of supply shocks, keeping the supply chain broken one after the other. So it's part of the regime. Like, people say, man, I can't believe you would think that they would, like, you know, blow up all these schools and buildings and people and cause all this stuff to save the monetary policy. I can't believe you think that Trump would be on the same side as, whatever, conspiracy theories that out there. I don't care what it is that people think or how it is they feel is the reasoning behind it. I just have to look at what is the results of what it is that's happening. Do we have constant breaking down of the supply chain? Yeah, well, I said this was going to be the case. How else do you create inflation without a supply-demand imbalance? The money printer didn't do it. They just admitted 15 years of it didn't do. The money didn't cause the inflation. Their problem, the professionals' problem, was try to figure out where it is that inflation could come from. Bang, COVID kicks into gear. Now we got inflation. Now we got series of problems keeping the inflationary pressures going. One problem right after the other.
First the pandemic, then the much smaller one from tariffs, and then we're getting...
And what's funny about it is that there's an IMF document that came out talking about people who have experienced inflation just recently. Like if you just all of a sudden got smashed with inflation, your sensitivity to inflation is much more dramatic going into the future. So if you hadn't experienced inflation, then all of a sudden you're getting hit with inflation, that has a different experience or a different way of reacting to that experience than if you have already been hit with inflation in the past. So if you've just recently got hit with it, you are going to react differently and probably more in the overreaction than if you had never experienced inflation before. So they know that the issues going into the future, even though they may not be as big as COVID, could probably be used or deployed in such a way that they could have the effect or the power of what COVID inflation had. Maybe not to that level, but at least the idea behind it because of the sensitivity that people have felt from previous inflation episodes. That's literally an IMF document. We covered that not too long ago.
Now an energy shock. No one knows how big it will be. It's way too early to know. As I mentioned, we do think our policy's in a good place for us to wait and see.
Okay.
All right.
So one last question.
This is really where it gets good. This is the part where it talks about the balance sheet and how basically the Federal Reserve says, you know, it's not our responsibility to deal with your unreasonable debt path. It's so good, right?
Hi, Mr. Powell. I'm Lola, and I was wondering at what point does the size of the US's debt break the point of natural systems repayment, and if that's something you're worried about now, or something you think our generation should look out for?
All right.
I don't think we know what that number is, a sort of ratio of debt to GDP, where it would be a problem. There are, of course, Japan being a great example, there are countries that have much higher levels of debt to their GDP than we do. What's clear is that our debt is growing much faster. The federal government debt is growing substantially faster than our economy, and that ratio.
All right. Our debt is growing faster than our economy. That means the economy is not keeping up. That's the unsustainable debt path that Powell is talking about, right? Like if we continue down this is going to fail. It's unsustainable. It's not going to work.
Is going up, and in the long run, that's kind of the definition of unsustainable. The level of the debt is not unsustainable.
The level of the debt is not unsustainable, and that's what's weird to think, like, because the level of the debt does seem like it's unreasonable to even think about paying.
But the path is not sustainable, and so it's really important that we get back to. We don't have to pay the debt down. We just need to.
We don't need to pay the debt down. We're not going to pay the debt back. That's what he just said. We don't need to pay the debt down.
To have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job.
It will not end well if we don't do something fairly soon, and it's not the Fed's job. Now you're going to have to rely on who? The government? They're going to fix this? Like, those guys have no idea on what it is that the Federal Reserve is even going to do, let alone have any idea on how it is that they could possibly fix an unsustainable debt path. Like, it's not the Fed's responsibility, and they're not going to do anything about it. It's not their job. All right? Like, let's listen to it again. It's good.
Begin
like he admits it. He was like, you guys are screwed, and it's
really
not our. It's not
that we get back.
It's so funny. It's like, you guys are screwed. And it's obvious you're screwed, and you guys probably don't even know how it is that you're really screwed, and it's not our responsibility to fix it. But we could see it plain as day. That's what that's what he's saying, right? It's so funny to hear this stuff. I don't know why it's not funny. It's not funny at all.
We don't have to pay the debt down. We just need to have primary balance and begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not.
All right. So, do you have any hope, any faith, any belief that the government is going to do anything fairly soon to get us off an unsustainable debt path? Well, it's not going to end well if we don't. And it's not going to end well if we don't do it fairly soon. So now I really have to ask that question. Is that something that you really have any faith, belief, and hope in? Is that the government is going to step in with like, hey, we got the right ideas to get us off this unsustainable debt path that is obvious going to lead us into a path of destruction and hell if we don't reverse course or do something about it. The Federal Reserve admits it. They know about it. They can see it plain as day. They warn everybody about it. And then on top of it say, it's not up to us to do something about it. It's on you. So you, the people, go and figure out who it is that you could possibly vote for who's going to do that. Let's play it again.
The Fed's job begin to have, and so it's really important that we get back to, we don't have to pay the debt down. We just need to have.
That's my favorite part. Balance. I love that part. We don't have to pay the debt down. Don't think that's part. Like, we don't have to do that. But what we do have to do is get on a sustainable debt path, which means that our economy has to be growing at least the same growth rate as the debt issuance, and we're not even close to something like that. It's growing at a rate that is far beyond control.
And begin to have the economy actually growing better, growing more quickly than the economy. It will not end well if we don't do something fairly soon. This is not the Fed's job. Of course.
So it won't end well if we don't do something fairly soon, and it's not the Fed's job. So now, who is it that Donald Trump is saying it's the Fed's job? Like, Donald Trump is saying it's the Fed's job to do this, right? Everybody else is pointing at the Fed. The Fed is the only one going, it's not our responsibility to make sure the government's on a sustainable debt path. That's the people's job. That's the people's job. Not even the government's job. It's the people's job to have voted for people who are not going to send us on this unsustainable debt path. But we don't. We don't vote for people like that. Ever. Never, ever. There's not even an option to vote for people like that. So what is it that we got to do fairly quickly? I do wonder, what is it that we're going to do? Because obviously the people have to do something, because the government isn't going to do it, and it's not the Fed's responsibility. Oh, no. Well, now what?
And I pretty much limit myself to those high-level points which essentially everyone ignores.
Oh, that's why. It's these high-level points that everybody ignores. That's why nobody talks about it, and nobody understands what it is that we're about ready to face going into the future. And this is why most people have no idea on how to position themselves, because they are literally looking for somebody to fix this problem. And yet here it is, Powell is admitting there's no way of fixing it. How do you fix this unsustainable debt path? It's not his responsibility. It's the government's responsibility. And if it's the government's responsibility, ultimately it was the people's responsibility to do it. And since the people have no idea on what it is that's happening, how can they possibly vote for somebody that's not going to do it? They are all going to go into unsustainable debt path. That's how they do it. And then once it all crashes, they're going to be like, oh, it's the Fed's fault. And the Fed's like, hey, we've been warning you, and it's not our responsibility. We can see it plain as day, and we're warning you. But it's being ignored. And this is essentially the end of the session.
So we're going to thank Chair Powell, but let me just describe the sequence of events that
Isn't that great? And that was it. He said all these high-level points are being ignored. Yes, they are. Absolutely. I think the Uneducated Economist has shared quite a few of them so that people could have a better understanding of what it is that's taking place with monetary policy. So many people are stuck on the idea that the Federal Reserve and the money printer had gotten away from them, but yet 15 years of money printer had the professionals trying to figure out what it was that they were going to do to create inflation, and then bang, COVID kicked in. Yay, COVID saved monetary policy. All this stuff is admitted by Jerome Powell here in this Q&A session. It's amazing to me. Like, I can see it. I can see it using through the lens of the credible threat theory. Most people won't hear it. They won't see it because they don't know to look for it. They didn't, it's not an obvious thing for them. But for us here on the Uneducated Economist, because we won't let them forget the words that they have used in the speeches to the other central bankers, we can see these things clearly within these comments that he is using. Yeah. All right, 20 minutes into it. Just watch and repeat. All right. We have no freedom. Charlie Kirk understands. Well, understood, I guess would be more right. All right. Just watch and repeat. So the oil crisis is helping the monetary policy. That's it. Yes, in a way it is, absolutely. And I know that's very difficult for a lot of people to wrap their heads around, but absolutely it is. It is helping monetary policy because ultimately it is raising the inflation expectation, which raises the neutral interest rate, and that rate moves ever closer to the Fed funds rate, which makes the economy less restricted. 80% of the people will not experience that stimulation because we are working class individuals trying to figure out how to get our paychecks to make it through an inflationary period, but the asset holders at the top, they get to experience a wonderful stimulation from this experience of having elevated inflation expectations while maintaining a steady Fed funds rate, which lowers the real interest rates. And then people wonder why it is we have a resilient consumer at the top 10, 20% of household incomes. Like, it makes perfect sense to me. Most people don't see it because, again, you think, like it doesn't make reasonable sense. It's counterintuitive to think that an oil crisis could help the monetary policy. That is exactly right. That is exactly right. It actually helps the monetary policy. Now, it doesn't help the people, right? Like the people themselves, they already, like, even the Federal Reserve, like, where is that thing? I bet you I have it on here. Hold on one second. I think I saved it. I did. All right. Federal Reserve Bank of St. Louis review U.S. inflation inequality between 2010 and 2023. Hold on here. The article analyzes U.S. inflation inequality between 2010 and 2023 using data from the Consumer Expenditure Survey and the Consumer Price Index. It finds that despite higher and more volatile average inflation during the periods, inflation inequality remains stable, even decreased compared to earlier years. Authors note that while overall household inflation experiences are similar, the specific drivers vary by consumer categories and subcategories. The study covers a period marked by the financial crisis and a pandemic of global supply chains and distributions. The following literature uses data from the Consumer Expenditure Survey and the Consumer Price Index. The article examines U.S. household inflation experiences during the recent period of the 2010 to 2023. We construct group-specific market baskets to reflect diverse spending patterns and identify key differences in inflation. Our main findings is that although average inflation was higher and more volatile during the periods, inflation inequality remained stable and even declined compared to with earlier periods. Nevertheless, despite the overall similarity in households' inflation experiences, the underlying drivers of inflation by consumption category, specific categories, can differ significantly. Inflation is the key role. And it goes in to talk about how people with families didn't necessarily experience the difference with people who were living independently, like singular. And that's where they talk about how the similarities were the same across households. But then they go into, and let me see if I can find it here. Oh, my damn computer's dying on me. Okay. But then if you go and you look into it, where was it? That was at the St. Louis. It just came out fairly recently. Probably find it yourself. If not, I'll go and get a link and I'll put it down in there. If you read through it, what you're going to find is that the upper households hardly felt any inflationary pressure from it at all. Like their experience with inflation was almost non-existent. So as the general population felt like the inflationary pressure the same, like the inequality didn't seem any different across the households with singular people, those who had, two incomes, no family, those with the family, all those categories all felt as similar. One category didn't feel it at all. Right, and that was the upper household incomes. And so now when we think about it in this fashion, there's people out there who talk about inflation all the time and they talk about the issues that they face from it. It's because that's the majority of the people out there. The majority of the people feel the pressure, they feel the pain, they feel the experience, and then they talk about how bad and that horrible experience is. And for 80% of us, that's the reality of the situation. It really is. But then we take that into consideration to be everybody out there, but it's not. The top household incomes, they don't experience it the same way. And so as 80% of the people are talking, the news is talking, the View shows you this crisis situation that's happening, there's a segment of the population who's going, yeah, it it's really bad out there, but it's not bad. They're killing it. They're loving it, right? Great content, Simon. Thank you. Yeah, you bet. Man, I can't believe my computer just died on me while I was playing that video. That's why. All right. Since we handled a monetary crisis before, who's to think they can't do it again? Well, and that's one thing that I think Ben Bernanke actually keyed in on that Q&A is that they are essentially like people are thinking that the Fed is trying to prevent the crisis. They're not. They're essentially managing crisis to crisis, right? Because they know that it's going to be another one that's going to come up at some point. And it's like there's almost no doubt about it. There's going to be another downturn, another issue, whatever. I mean, you want to call it a crisis or whatever. Like a lot of people will call them false flags, but anyway, it doesn't matter. Point being is that the Federal Reserve is attempting to manage from crisis to crisis, and most people look at them as causing crisis to crisis, right? Powell is out and he is mad, so he is just painting a picture of doom and gloom. And see, now this is an unfortunate consequence of a mindset too. And now don't get me wrong, South Texas, I used to very much think the same way, but Powell doesn't really have that much power, right? And this is one thing that I've learned about studying the FOMC is that there's 11 other voting members on the FOMC. And when you think about what it is that those 11 other voting members are talking about, it doesn't necessarily always align with what Powell has said. And so when you have dissenting votes that are taking place within the FOMC, that isn't everybody aligning with what it is that Jerome Powell wants. And if Jerome Powell wants to lower rates, but everybody else votes against it, that's too bad Powell. He doesn't really make a decision on interest rates other than his vote that he gives. He can give his insight. He can, try to align the committee in the idea of what it is that they are working towards as far as their goals go, but each one of them has their own independent idea of what it is that they feel needs to take place with interest rate setting policies in order to achieve the consensus statement, which is that long run statement on strategies and goals. So for me, Powell makes zero difference. He's a spokesperson, and that's the only thing. Like, it doesn't matter. I didn't like Powell's. It could have been anybody. It could have been Warsh or Powell or anybody else sitting in that seat answering those questions. It would have made very little difference to me. It's the responses that they are giving that I am looking at, right? Powell is not the important factor in this. He's not going to be a decision maker, as far, neither is Warsh, right? I mean, there's an entire FOMC. They have a consensus statement. They have, 5 alternates. They have 2 advisors. There's an entire team that puts together monetary policy. And to think that one person is a decision maker on it it's not accurate. All right. After the great financial crisis, the Fed approved and watchdog agencies to prevent a crisis from occurring again. Right? Nothing goes down. Our utilities that doubled a few summers ago will go up again now that we are use of the new norm. It's against the Fed's policy to say or imply that deflation may be in the future. Their position and goal is to keep inflation and avoid deflation. Prices will go down for digital commerce chips, implant people. For chips and soda. No inflation if we can't buy anything. Bang, you do know every event 2001, right? It was all planned based on the monetary policy. Inflation on energy will stop industry. How do you feel about a 401k? That's something that a lot of people kind of push back against, but to be honest with you, I look at my 401k and I'm pretty pleased about having one. Now, I heard this argument before, like when I said my boss is matching my contributions, that's free money. Somebody says, no, that's your money to begin with. You just assume that it's contributions, or at least matching contributions. But that's just what they tell you. It was your money to begin with, and that's all but that's not the case because I didn't have to accept the 401k. Right? And there's people at work who didn't. They're like, no, I'm not down for it. I personally, I'm like, yeah, how much are you gonna match? And he says, we'll match up to 3% of your check. I'm like, 3%, bang, no brainer, double my money instantly, and then put it into an account that then will be like essentially in the stock market. Yeah, all right, double my money and then put it in the stock market and tell me that's a bad idea. All right. And like, I mean, I know it's locked in for a long time. I can't get it out until I'm, retired or whatever. But good. And like less access to it, the more likely it's going to be there when I get old. So I don't really look at it as something that is locking my money away and keeping me into the system and doing all that other stuff. Although that's what it does, right? It denies you access to that money because now you're going to have to pay a fee for it, to pay taxes or whatever to get it out. So there is that goes into it. You could be using that money for something else. But for me, like if I didn't put it in there, how do I instantly double my money? Like if I have money right now, how do I instantly double it? Well, I could put it into there for 3% of my check and boom, instantly double my money. Cool, man. That's like a no-brainer for me. And it was just like, yeah, cool, man. Okay, so I can't touch it for a while. Whatever, man. Double and then start growing an interest off of that. Yeah, I'm down, right? So the 401k on that sense, I participate on it my own. But ultimately, if you have better ideas on what it is that you can do with that money, like, start businesses, getting into rental properties, doing something like that, then I think that would be a better move than to say go into a 401k. That's just my position on that. There is the possibilities of confiscations and all that other stuff, and I put that pretty low on my concern list. Is it real? Yeah, it's a real possibility. And everybody talks about how, when it crashes, so there goes all your retirement and all that other stuff. Well, that's if you're 100% in your 401k, which I wouldn't recommend that either. In fact, I don't recommend being 100% in anything, right? If you want to be incredibly rich, you put everything you have into one thing. Right? That's how you make it rich. You put everything into one thing. But if you want stability in your life, you spread it all around and you diversify into many different things. And that way, if something crashes, it's just like, oh, yeah, that's a bummer. Well, good thing I have other positions out there. Right? And you don't worry about anything that happens out there. Like, I mean, you kind of worry about some stuff, but you don't worry like other people do. Assets or land? It's a personal choice. Right? I always put match for 401k, but that's it. Any extra, I'm buying rentals and Bitcoin. Yeah, see, Rinks Rentals got it, right? That's exactly it. I mean, why wouldn't you put the money? It's like most people are like, man, where do I put my money so I can get a 10% return? And I'm like, I know where I can put my money so I can get an instant doubling of it. And it's 3% of my check, but that's a pretty significant amount when you really think about it. If you do it for a lifetime, of course, I won't be doing it for a lifetime. And then the rest of it, yeah, you get into other things. I'm selling my vacation condo. Utilities way too expensive. 401k is a tax shelter. If you are investing in the stock market, why wouldn't you use a tax shelter? And that's where I kind of look at the Roth, because now it's like not only just a 401k, but you got a Roth 401 as well. And so being able to put taxed money in there as opposed to pre-tax money like the 401k part has, which is pre-tax, I can put taxed money into the Roth, and then at the end of it, like when I go to pull it out, it comes out tax-free no matter how much gains it has. And that's pretty damn cool, right? So I mean, I work both angles of it. So I do put in a little bit more than the 3%, but not much, Pre-tax 3% too. Buying a company's stock through an employee's buying program at a 10% reduced rate is effectively an immediate 10% return on investment. We don't get insurance or retirement 401k through jobs. We pay out of pocket through Christian Medishare and invest in rentals and crypto. I like to do my own thing. Yeah, and Sunset Ski, that's like Sunset Sky. Sunset Sky. That's totally reasonable, and I totally get why somebody would want to do that on their own. Taking control of it for yourself like that is probably the ultimate way of feeling the freedom and independence away from, the experience of like being stuck at a job or a career or something like that. So I totally get why somebody would want to do that. Now, me personally, at 40 years old, when I didn't have anything going on in my life, no money, no savings, no retirement, none of that stuff going on, I take advantage of every opportunity that is out there, no matter what it is. I mean, it was just like I can't deny myself any options out there right now. I have to look at all options. All right, putting 70,000 in last year through my business solo 401k. It's a 20k savings on federal tax, i.e., free 28%. I'm 73, living on my 401k. You have to go heavy on your return to build it when you're working. Was waiting to sell vacation property for the best tax advantage. Kirk, you've been selling that for a year already. Deja remembers. She won't let you forget. All right, you guys are awesome. This was a lot of fun going through through this review of what Powell had stated in this Q&A session, and being able to pick out the credible threat theory, like using the lens of the credible threat theory to listen to what it is that he was saying in order to get to the heart of the matter. I mean, that to me, that was a bombshell statement of him saying about how it is that people who are seeing an elevated inflation, yet you got this locked in 2% interest, or a 2% inflation expectation. People can make a lot of money on that, but they don't. Like, he is admitting it right there that people do not see the lowering of the real interest rates, or how it is that inflation expectations is actually creating a less stimulating economy. But people don't recognize it. They don't know it because it's not spoken out there. I mean, here it was. There was an opportunity for any one of these kids to step up and say, hey, could you explain the rising neutral interest rate in relation to the Fed funds rate? And if the economy is less restricted, I would have loved to hear a question like that to get the response. But, they don't know to ask that question. Nobody would know to ask that question, really. Lincoln City, Oregon. That's a fun place to go. I mean, it's all right, And go down to Newport. Newport's got some fun aquarium stuff down there. Simon, you got my times all screwed up. You're coming on at 10 a.m., 3 p.m., 11 p.m. What is going on here? I'm on vacation. So I don't have time, man. What is time? What time is it right now? I don't even know. All right. Deplorable. He's on vacation this week. Yep. See, Justin knows. All right. You guys are awesome. Thank you so much for being here. We're going to cut this live stream. We got 167 people watching. I saw it up over 200. That was cool at one point. 69 likes. Be sure to go over and hit that like button. Get the YouTube algorithm to spread this thing around. I don't know who else is it that's going to hear some of the things that Ben Bernanke stated, like the credible threat theory did. Oh, there you go. That's a way to keep me around. Send me some super chats. But here on the Uneducated Economist, I cannot let it go. I cannot let this stuff go, because once I seen it and once I recognized what it was that was happening out there with the inflation expectation, I just had to make sure that everybody understood what it was that was taking place. And most people won't see it. They'll never see it through the lens of the credible threat theory, just simply because sometimes they're actually too close to it. They're actually too close to the situation. They're too close to the details. They're too close to the problems of the political atmosphere. They're just literally too close to the problem. And if you push yourself away from it all for just a minute and just ask yourself, does this raise or lower the inflation expectation and what that means for the neutral interest rate in relation to the Fed funds rate? And you try to understand that, all the stuff that happens out there, the chaos, the death, the destruction, the bankruptcies, the failures, and all that other stuff, although that is part of it, you recognize it for what it is, and that is the system in the way that it operates. Like there's never been a time where there wasn't more war, more debt, and more separation between the rich and the poor. Now we can try and figure out ways of stopping it or figuring out ways that it occurs, and then try to figure out ways that we can position ourselves for that, right? Like most people just want to blame. They didn't like their fault for doing it, you know. And to me, it's just like, okay, well, that's a fun story. Now, what is it that I'm gonna do? Because the environment doesn't change because you blamed them, you know. All right, let's go check out that super chat real quick. I click UE videos just to let the ads play, and then I go about my day. T Flats 123, man, I appreciate that. Thank you very much, man. Thanks, Simon. Keep it up, and I can't get enough. Well, I can't seem to give it up enough either, so I'm glad you guys are here. When I actually know how to swing trade, it's better. Taxes don't even after when you can actually trade. I choose not to afford you. Maybe still can't afford it. Alright. Just got my boy about to hit the road. I don't care. Look, there are after all of it. They are after all of it. Yeah. Well, I'm sure they are, you know. I mean, I'm sure like a lot of people feel the pain and suffering of what it is that they get from, you know, this experience of being in this kind of ever increasingly debt issuance fiat currency system. And I totally understand how people like just hate it. Like they don't want to see it like this anymore. They want to be able to have a savings account that stretches into the future and that their, you know, purchasing power isn't lost. And I get it, man. Like I would want those same things too. Like if I could wave a magic wand and make everything perfect, I would. But that's not really a reasonable way of going about anything. You have to think about it the way it really is. And the way it really is not easy or fun, right? Like it's not fair. It's not going to be fair. That's one thing I hope people really truly understand is that, you know, at the end of the day, when they think about the horrible experience of their life and they think to themselves, man, this wasn't fair. You're right. It wasn't. None of it was fair. And it wasn't going to be fair, not from the very beginning. And if you take that out of your considerations, then you don't expect it to be fair anymore. And you start moving in a direction that starts fitting you better because you're not anticipating any kind of fairness out of it. Man, look at all these super chats coming in, man. You're awesome. That's the way to do it, man. Thank you so much. All right. Me, my cow loves grass. I love the name. Me, my cow loves grass. These handles are just great. Thank you so much for the $5 super sticker. T Flats 123. Thank you again for another $7.99. I only just got here, but I have. You got any thoughts on Iran war? Is this what the Fed wants? New prices? Now, here's something that I think is really interesting about it is that, you know, like I I would never say that they use COVID to save them. I mean, I have, right? But I mean, how is it that you would formulate an entire conspiracy theory that the Federal Reserve was like sitting around one day going, all right, well, you know, maybe if we fire off a sickness and create a supply chain breakdown and then get an inflationary scenario from it, we can save our monetary policy. Like, I have a very difficult time trying to wrap my head around that conspiracy theory. Now, what I find very interesting about it is that soon as COVID came out, people were like, they released it. It's a manufactured thing. It's a false flag, blah, blah, whatever. It's just being pushed out there as this, like, you know, government cover-up thing that is being forced upon the people to, you know, cause this death and horribleness and government control and martial law and all these other stuff. And so as I'm sitting back and I'm listening, like, I didn't say any of that stuff, right? Like, I'm not, you know, people are like, oh, dude, they're going to come door to door, make you take a vaccination. And I'm like, okay, yeah, and unless they have a warrant, the door's going to be locked, and I'm not sure what it is that they're going to do about that because I ain't letting people in, right? You know, and that's all there is to it. And so as I laughed about what it is that people were concerned about, I think to myself, holy crap, even what we heard from Powell earlier, they went 15 years without able to find an inflationary scenario, and now here COVID is creating the perfect circumstances to save the monetary policy. It was like, the monetary policy was stuck at the lower bound. They were like, guys, if we do not find it, like they're sitting around the table going, guys, if we do not have inflation and inflation expectation in a mad hurry, we are going to lose our monetary policy. What in the world could ever possibly save it? And they're like, okay, natural disasters, major global confrontation with wars, we got tariff, COVID, pandemic, poof. Whoa, stimulus packages, special purpose vehicles. Man, this is going to be awesome, because you know that there was a plan already set into motion, because there's no way that they could have developed a plan that quick. Like, they literally had a plan set, like what it happened. If these things happen, this is what we'll do, right? And then those things happen, and they said, okay, well, here's the playbook. This is what you do, right? Because you could not have possibly developed all that stuff overnight in order to save the monetary policy and the economy, that warlike effort. It was very well planned. I don't know about the COVID part of it, like, whatever, but the response to it was like, come on, how is that even possible? How is it that people did not recognize that they were able to come up and formulate a plan overnight? They're like, oh no, surprise, COVID. This is what we're going to do. Like, what? You guys came up with that way too quick, And then what they had totally saved monetary policy. Everything about it. It started causing the inflationary expectations to rise, and they've been stuck elevated ever since. Even Jerome Powell admitted that the series of supply chain shortages, from tariffs, from war, from whatever. I imagine Fed independence is going to be the next one. These things are constantly being pushed now into the system, and it's totally keeping the inflation expectations elevated, which was the problem that the professionals were trying to solve for the previous 15 years. I don't know how many other people can see it. I see it clearly like that. Most people have a difficult time because they have to change their entire belief system around in order to grasp what it is that the credible threat theory is delivering. But once you see it, it's just like, wow, that is the most obvious thing in the entire world. Like everybody else has these massive confusions. So when I think about the Iranian war, what I find very interesting about it is that I'm finding people out there who are making videos going, don't we have like this massive military that could pretty much take on the entire world simultaneously, and yet we're having a little difficulty opening up the Strait of Hormuz? Like, doesn't that seem odd to anybody else? Unless it works to the advantage for somebody out there to keep this supply chain broken, this series of broken supply chains constantly. Like, it's not fair. People die. People lose everything they have, right? However, if they don't do this, the consequences to the entire economy would be much broader and more felt by everybody, including the top. And they don't want that. They're in charge, so the last thing they're going to do is screw it up for themselves. You might face the consequences from it, and they actually know that was going to happen, and it's pretty evident out there when you see it. And the Iranian war is, kind of evidence of that as well. But when I think about how it is that they use it to their advantage, very much like the COVID pandemic was used to their advantage, tariffs are used to their advantage, right? All these wars are used to their advantage. Now, whether or not they're causing it on purpose, they're using it to their advantage. Like, oh man, bad times. Well, that sucks. What do you boys think we should do about that? Right? Maybe we should push that elevated inflation expectation a little bit more. Maybe we can stimulate the economy by holding the Fed funds rate steady. Just saying. Lower the real interest rates. So I don't think Iranian war is something like they're doing like on purpose to save monetary policy, but I think that they're using the Iranian war in a way that saves monetary policy. Huh? All right. how much are private equity and private credit paying into the inflation expectations in the critical theory? I don't know. I really don't know. I mean, I don't know. I mean, I guess if I couldn't imagine, like if I went to the average, like I just started picking people off the street and I said to them, are gas prices going up on account of the Iranian war? What do you think the response would be? But then if I went to them and I said, do you think that there's going to be more inflation because of the credit equity or the private credit and private equity market? And they would look at me with a blank stare like a deer in the headlights. They would have no idea what the hell that meant. They would have no idea if that would cause inflation or not. So the inflation expectation, I think it would be more focused around Iranian war, energy, oil prices, gas prices, stuff like that, as opposed to what's happening within the banking sector, unless the banking sector itself decided to start delivering what it is that's happening with private equity through places like The View, right? Like that talk show with all the, the women talk show, whatever it is, right? Like if you started hearing about private equity and credit there, then that would be the delivery message that people would want to, that the central bankers would want you to hear in order to get the elevated inflation expectations from it. But if it's not being spoken there, then it's not something that they want you to hear about or are using for the inflation expectations. Yeah. I mean, is it a problem? I think it could be. I mean, it's like a bombshell in the making, The like the derivatives market is crazy to think about. Like it's everything that derives from an investment or a dollar that may not exactly exist in the view of the authorities or the regulators out there. And you think about like how many dollar derivatives exist outside of the nation, it is just mind-boggling on how much. It's just like, oh, holy crap, if this thing starts to come undone, it can be like massive, a massive crashing. Like I can't even begin to try and wrap my head around it. So in the sense of like that, you probably have a lot of inflation, right? There's a lot of like contracts that have been written in dollars that get used like dollars. That's creating currency that the Federal Reserve didn't have anything to do with, or the United States government, or anybody else that has anything to do with the United States, but yet it's adding to the currency. It's being used like dollars. If it's being used like dollars, that's like a dollar transaction, even though it doesn't have anything to do with the dollar other than being a contract that is denominated in dollars. See, all these people are talking about like how it is that the dollar is losing, like people are losing faith in the dollar and they're getting out of the dollar and they're getting into all these other currencies and all this other stuff. And I'm like, yeah, I totally believe it. Now, when you go to unwind the dollar position that everybody holds, there ain't enough dollars out there to cover it all. There is not enough dollars to cover all the dollar denominated debt. And that is a scary scenario going into the future when it comes time to secure a dollar in order to pay your debt, and the dollar is strengthening beyond anybody's belief. That's a very hard concept for people to wrap their head around, but it's a very real thing that can happen. You guys got me to stick around. That's cool. 194 people still watching. Be sure and continue to hit that like button. As soon as you come into the live stream, you should hit the like button. Algo loves that. All right. Gotta bow down to the algorithm. Not that I really do. I just kind of do whatever I want. Like I was gonna cut back on content because I felt like I was oversaturating YouTube and the algorithm didn't like it. I'm thinking, you know what? I don't care. And I'm just gonna keep going doing what I do because I love it. I don't care. All right, T Flats 123. Thank you again with the $7.99, man. If you say these exact type of sentences when you give the Fed speeches, the mark will do so and so equal Fed speak. In the market will do so and so the Fed speak. Yeah, it's absolutely right. If you see, here's the thing. Like though, I don't fall for the spoken words on the stage. Like when they're on the stage giving their like press conference or they're giving their interview or something like that, to me, I don't listen to the words that they are using as insight or information to the policy or, the strategy or anything else. When I hear them speaking out there like that, the very first thing I do, as soon as they are done, I turn to the audience and I think, what did they hear? Right? What did they hear? Did they hear inflation expectations? Did they hear lowering rates, hiring rates? But what did they hear? What was it that they interpreted from that person's communication out there? Because whatever it is that they heard is the monetary policy. If it was an inflationary pressure or lowering of interest rates or whatever it was, that's the delivery message of it. Now, when I look at that, I think about it differently because people say, oh man, the Federal Reserve doesn't know what to do. The unemployment's getting out of control. And I'm like, that is not their concern. Don't stress that. Right? I've been saying that for a long time. Even today, it's still not their concern. But yet people will think that the Federal Reserve is going to act in a particular way based on the unemployment. And they would. I totally agree. But the unemployment is not their problem right now. If it was a problem, I would agree with it. Yes, they are going to do something about the unemployment, but right now, that's not their issue. Their issue is raising inflation expectations and keeping that elevated. That part seems counterintuitive to what it is that the Federal Reserve would truly want by their dual mandate. I totally get that. They're trying to get to a 2% target over the long run, right, with full employment. Whatever the hell that means. They keep shifting the goalpost around to figure out what the hell, full employment or low unemployment or what's a 2% target over time, since they've never really actually achieved a 2% target in their history. How is it they could ever do it into the future? This becomes a very confusing dual mandate. Like, most people see it very locked in stone. 2% target, low unemployment or full employment, and they don't see it any other way. But to me, that seems very different from how it is that the Federal Reserve really conducts themselves, especially when you read about it from their speeches saying, oh man, normally if we let unemployment run this hot, it would have created an inflationary scenario. What do you suppose happened? And that's the Federal Reserve wondering what happened to their monetary policy and why it broke. I guess I know that's, again, it seems very backwards from what it is that a lot of people would believe out there. But then again, monetary policy is not being conducted in a way that people would have typically anticipated from the Federal Reserve's, strategy from years ago. From years ago, thinking about it, like, it doesn't work in the system anymore. Like, even, most people, like, all the people, they think it's all, they get it all wrong. And I'm like, I'm not trying to say, man, they're getting it wrong. I'm the only one who gets it right. All I guess I'm getting at is that I believe the Federal Reserve when they said, crap, we are stuck at the lower bound of zero and we can't find inflation. And I'm laughing at them going, what do you mean you can't find inflation? You just did all this quantitative easing. I just dumped all my money into silver, believing we were heading into a hyperinflationary scenario, and you're telling me you can't even find a 2% target? What the hell does that mean? I was so mad at them. I'm like, I'm going to start reading through your words. I'm going to start figuring out what the hell that meant, why it is that you didn't create an inflationary scenario with all this money printing, considering that I was banking on that being the case and dumped every bit of money I had into silver, believing that we were going into a hyperinflationary scenario, only to find that it didn't happen. Why? Because they were stuck at the lower bound of zero with a very low R star, very low neutral interest rate. Oh, you couldn't get any stimulating effects out of it. Now I get it. I'm starting to pick it up a little bit better. And as I see the people out there trying to explain it, I'm like, you're not getting it. You're explaining it from an old school mentality. There is a change, a shift in the monetary policy regime. And I really feel like the Uneducated Economist is the only one who's covering it. If you say these exact type of sentences when you give the Fed speeches, the market will do so. Do they use Fed speak as an actual monetary policy tool, though? Yes, they do. Yes, they do. I.e. guiding one way or another, even vaguely, can move rates, equity prices. They do use them. Yeah, absolutely. That is, I don't know how many, let me see if I can get, hold on here. Did I bring it out here? Hold on, let me see if this thing will hold on for just a minute. It just went dark, but I think I can bring up the files here. Maybe. Alright. Yeah, here we go. Alright. The battery's about ready to die, but I think I can bring this up. Oh, come on. Yeah. Alright, this is textual analysis. Textual analysis, essential bank communications. Reading between the lines, textual analysis, essential bank communications, February 21st of 2025. So it's a little over a year old, but the statements in here very much say it, that there are sentences that they use that will definitely alter the market. It says here, using textual analysis, high frequency asset price data, and high frequency central bank communication data, this research shows that investors' reactions to specific sentences communicated by the central bank are quickly incorporated into asset prices. It goes on to say, policymakers know that their communications are likely to affect the course of short-term interest rates, other asset prices, and the associated economic outlook, resulting in an easing or tightening of financial conditions. So they very much know the specific words and sentences that they can use to either create an easing or tightening of financial conditions that will alter the asset prices. Yes, their words are very powerful and they know exactly how to use it. I mean, they got AI to do it now. They're like, AI, like they just punch it in there. They're like, hey, AI, man, what words and sentences can I use that will raise or lower the asset prices? What phrases can be done to ease or tighten financial conditions? Like they got an entire speech dedicated to just that, you know? All right. Thank you, Yui. No other person talks about it like this, so thank you. I truly appreciate you being on YouTube. Well, thank you, T-Flats123. I really appreciate the support for the channel. You know, a lot of times I get out here and I share this information and I think to myself, man, is it really worthy? Is it really, am I really changing anything for anybody out there? Am I just like, you know, just kind of just speaking out there for no reason? And I've had so many people who have come to me and thanked me and said, dude, man, it took me a while. Like I've been with, you know, the channel for a couple of years. It's finally gotten through the credible threat theory. I really appreciate you sticking with it and, you know, and holding on as long as you have. And I have to tell you, man, when I hear a message like that, that's what drives me, man. Like the money is awesome. I love the YouTube revenue, especially when it was like lumber was taking off and I was, you know, had videos that were getting 30, 40, 50,000 views or whatever. Those are really cool times when that was happening. And, you know, I take it for what it is, you know, and all good things come to an end. I wish, you know, I had a topic that was as intriguing as lumber running up to its all-time highs as it was and being in a position in which that I could talk a lot about it from a good insider point of view. Those days, like I can't invent them, you know, I can't make them appear. But from my studies and what it was that I was doing to try and understand the lumber industry and the ability for me to call out the lumber industry as well as I did, I know it was because I was looking at the economy far differently than anybody else was. So when people said, dude, you're really good at calling out the lumber, I'm like, yeah, let me share with you how I was able to do that. And then they get like their mind is just blown. They're like, dude, you're really good at the lumber thing, but yeah, your Fed stuff, yeah, I don't get it, man. That part, nah, not so good. And I'm thinking, how do you think I was able to call out the lumber thing? Like, you know, I mean, it's like most people that I was working with were saying that lumber industries was using greed and manipulation. And I'm like, guys, you're sitting right next to me. I'm sharing the information out here on YouTube. You know as well as I do. But yet, even them, they couldn't understand it from the macroeconomics point of view. Like they just couldn't see it because they weren't aware of it. And as much as I would love to share it with them, only people who are willing to receive the information are going to hear it. Okay? So as they couldn't figure it out and didn't understand, they fell into the trap as everybody else did and just decided that it was greed and manipulation. And I'm thinking, well, you're going to lose sight of it too. You know, you'll lose sight of it too. And they did. UE, the first thing you have to do when listening to this channel is drop the victim conspiracy narrative. One once done, you can then actually hear and learn from what you are saying. Yeah. Yeah, that's it is too, because I think that's one of the biggest things that I get a pushback from is that, especially from the conspiracy theorist mindset, and having been one myself, I can totally get it. Like, if you are not on the idea of destroying the New World Order, you're kind of like on their side, right? And that's the unfortunate consequence of having like the controlled opposition doing that, is that they will literally get you to believe that if you are saying anything other than destroy the New World Order or destroy the globalist or something like that, eat the rich, then you must be on their side. And once that has been the impression that has been put into the people, the unfortunate consequence from that is that the information that they would need to actually like end the Federal Reserve will never be heard, because then you have to step into the mindset of the central banker itself, which means that you have to let go of the conspiracy theory part of things, which is almost like abandoning a friend. It's like, if I let go of this conspiracy theory, then the whole world will start to come apart. Like, if I don't keep this thing, who's gonna protect it? Who's gonna keep it going? Who's gonna keep it alive? It's gonna die, right? And I think to myself, it doesn't do anything for you. Like, you have committed yourself to keeping this thing whole. Like, I gotta keep it exposed. I gotta share it. It's like it's my baby, or whatever. But it doesn't do anything for you. I assure you, if you let it go, the world won't come to an end. It won't. If you pick it up, the world won't come to an end, and if you let it go, the world won't come to an end. You have to understand that if you're holding on to it so tight because your feelings of like commitment to this thing is so overwhelming that if you let it go, it's like the whole world will come undone, and if something is going to die, you're wrong. That is absolutely wrong. Once you let it go, you can then open your mind to then the possibilities of what it is that's out there. Most of the New World Order stuff is packed with negative connotations and just this horrible like feelings that come with it. When you kind of look past all that stuff, you look towards the positive that exists out there in the world. And once you start seeing more of that positive, you start finding more positive things coming towards you. Simon, you taught me I have to stop giving my energy to all the bad forces out there. Walrus, that's exactly right, because what ends up happening when you are doing that is you are feeding a power pendulum. And this is really where, like, I think a lot of times people misunderstand what it is to be on a power pendulum. Even if you don't like what it is that's happening, literally giving it attention, communicating about it, sharing the idea, talking negatively about it, all the stuff, trying to even prevent it from occurring, right? All these stuff adds to the power pendulum, right? It gives them the power that they are looking for. And now, to understand, like, how simple a power pendulum can work, you can think about it from like a religious point of view. Like, people carry on religion even though the people who had never, like, the people who started it don't exist. Like, none of those people, anything about them have all completely gone, but yet here this idea continues on. It's the power pendulum of that particular religion. And this can happen in all kinds of things. It happens in politics, it happens in relationships just between people or whatever. Like, I even think about the bingo game that I play. Like, on weekends, I call a bingo game down at the tavern. The people who started that bingo game was back in the early 80s. The owner of the bar, the original players, the people who called it, all that who started the bingo game have now gone. There is nobody original to the bingo game, but the bingo game continues, right? And it may very well continue even after I'm gone, or, even all the players who are playing it now have moved on to other players. It's very well possibility that that bingo game can continue, because that's the power pendulum. Once you recognize how these things work, the more you add attention to it, the more you feed into that power pendulum. Whether it's good or bad attention doesn't really matter. It doesn't matter, right? So long as it's energy and so long as it's attention, then you're feeding into it. And this is how it swings. You will find it big time in politics, right? You will find it big time in politics how worked up somebody will be over a particular political, thing that's happening out there. They will like rehearse the talking points. They will be committed to the idea. They will ration, how it is that life would be with it or without it. They will talk all over the place to people. And then one day they find like that topic just fades away and it's not important anymore. And their commitment to it, that love that they had, that thing that they were holding on to, nobody else finds it important anymore. And now they find that they're not important anymore. What this whole thing that I had given all this attention and focus to, what happened? How come, where did it all go? And I think to myself, you fed into it. You fed them the power that they needed. They used your energy against you, sucked it all out, and then left you with nothing. How many people were ready to take up arms and go down and build the wall? Right? I remember this during Trump's first administration. I'm like, what in the world? I haven't heard anybody talk about, personally, I haven't heard anybody talk about a wall in a long time. At one point, it was the most important thing out there. How many times did you hear about Korea and how they were going to, we were going to go to war with them? Right? Then it's all over. And then you don't hear about it anymore. Right? It was just like they use these power pendulums to suck the energy out of you. And that's the unfortunate consequence of what most people end up facing when they look at politics or look at the news out there, is they start feeding into those power pendulums and just literally deliver it to them, talk about it, share it, communicate about it, philosophize on it, and then once they are done using it up, then you're left with nothing. Okay? But they got your attention. That's what they were looking for. Aloha from Hawaii, right on. Financial firefighter, thank you for being here. We were going to end this stream about 45 minutes ago, but then they got me talking again, so here we are. All right. The Pit and the Pendulum by Edgar Allan Poe. Yeah. That pendulum comes down and slices the guy. All right, love these talks. Yui's life teachings. Thank you so much, T-Flats123. Yeah, I really appreciate that. I most of the things that I talk about when it comes to that is just life lessons that I have learned, I mean, I had to figure out what happened to me, because when the YouTube channel took off and I was just like, man, it felt like something had a hold of me and was shoving me forward. I really had to go back and I had to look and say, like, man, what was it that was going on in my life that had such a dramatic difference? And I know what it came down to was what it was that I was thinking and feeling at the time. By changing my thought patterns and changing my beliefs, I was able to change and manifest a lot of stuff into my world, into my existence. And a lot of it really just came down to what it was that I was thinking and feeling. When I thought and felt like the world was after me and how I was going to be in debt for the rest of my life, and the horribleness of existence was, everywhere to be seen. That's all I had in my life. But when I gave that up and I thought, man, there's people out there who are actually making it. There's people out there who are killing it right now. Right? And they're not waiting. They're not waiting for, something else to change in their life. They're going for it. And I thought to myself, I should do that too. Right? I'll get out of debt and I'm going to go for something too in my life. And what's funny about it is like, for a lot of people out there, when they go for it, they want like jet airplanes and fancy things and all kinds of stuff. Like, it's just, massive. And to me, I'm thinking, I just kind of want a nice view and some good music and a ribeye. Like, that's like I have very, my like wants in my life are very low. Like, I don't have a lot of I guess like traveling, I would like to travel more. That would be cool, and having a job kind of limits that in a lot of ways. But if there was anything that I would want more in my life, that would probably be it. Like, everything else I kind of have, I can do whatever I want. That's kind of cool. I mean, Not that I ever do anything, but I could if I wanted to. You know? Heard earlier that lumber manufacturing plants will be opening back up here. Maybe, but I don't see the demand for it picking up, so I'm not sure where it is at the idea of opening up a lumber manufacturing, like a mill, would be like conducive to the times, unless they see something that nobody else does, which is very real. I mean, that could happen. But at this point, I don't see the demand for lumber picking up, and I don't know why they would start producing more. Just want to go fishing. Yeah. Way off topic, but I sure would love to see some steel making plants open in America. Yeah, the unfortunate part about that is that you're not going to have the profitability of making steel in the United States when you can ship it in from other nations across the globe at a cheaper price. Now, that might change for a short time as we have some disruptions within the supply chains, but ultimately, manufacturing steel in the United States isn't as profitable as it once was. Like there was a time when we were a very good, manufacturer of steel, had the best steel in the world. In fact, we shipped steel all over the place. But that's when we were a manufacturing powerhouse. We're not that anymore. And although it's a good idea, I mean, I like saying it outright. Yes, I would love to have more of that happening here in the United States. But the reality of the situation is that we're just not economically feasible to do it. Cantillon effect. All right. Cool. Are we coming to an end? 177 people watching with 118 likes. Thank you so much for hitting that like button. All right. I think something was just signed today to become independent from Canadian lumber. It included opening government lands across America to forest. That's not the problem, though. See, that's where the confusion really lands, is that it's not the opening up of forest lands. That's not the issue. We are an exporter of raw logs, right? We have plenty of raw logs. That's not the issue. We can cut as many trees as you want. That's easy, right? It's finding a buyer for those raw logs outside of the United States, right? Because if you don't have a buyer for the raw logs going outside of the United States, then the logging companies have an issue. Because here in the United States, we couldn't saw up enough of those trees to use for ourselves. We have to ship them out of the country. Our forestry, I don't think people realized how big of a forestry industry we really have in the United States. It's massive, right? When you compare it to Canada, Canada has a different one. They produce way more lumber than they could ever possibly consume. Way more lumber than they could ever possibly consume. They have a huge forestry industry comparatively to the population of the people there. Totally get that, right? But when we're in the United States, all the lumber that we produce, we consume, and then we buy some from Canada, right? So 80% of the lumber that we use, we produce domestically, and then the 20% that we get, 80% of that comes from Canada, and then a chunk of it comes from Europe or something, right? This is the situation that the United States faces. So when it comes to producing more lumber, that's not the issue. We can produce lumber easy. We have the trees to do it. We have available trees to do it. The market for trees outside of the United States is starting to wane. Those partnerships are getting severed. And now the logging companies here in the United States, they're going to need to find a buyer for those trees. And if it's not the mills, it's got to be foreign buyers. And if the foreign buyers are giving the United States the finger, you can open up all the forestry lands you want. It doesn't make any difference. It won't make any difference. The demand has to be there for lumber. If there was a demand for lumber, then the use of the trees would make sense. But right now, we have trees that are being essentially logging companies that are trying to find a buyer for the trees right now, right? Exporting those trees out of the United States. I don't know how many people look at that as far as a consideration. That's a very real thing that is happening right now. I mean, I live on the Columbia River. There's a bridge that goes over to Washington that goes over into Longview. There's a log, essentially like a distribution center right there where they load up all the freighters and send them out to wherever they go out there in the world. You should see how many trees are there. It's insane. It's like at times you'll drive over that bridge and I swear it looks like there's 2 million trees down there just stacked up ready to be put on the ships and sent overseas. When I think about what it is that opening up forestry lands will do for lumber supply, I'm thinking, I don't know how that's going to help. Like, that's not going to help. Yeah. That's not, you got to find a buyer for the trees, And then the opening up the forestry lands would make sense because then the trees would be worth some money. But right now, if you can't find anybody to buy your trees, or the trees are getting expensive due to like government intervention and taxing like happens up in Canada and some places here in Oregon, you will find that the demand for lumber being as low as it is and the price of the trees being as high as they are, it doesn't make it profitable for the mill to open it up, right? And it's not even like the trees aren't available. The trees are available, right? It's just the demand for lumber isn't there, and that's really what it comes down to. Right? It has something to do with the massive trade with lumber from America. Oldest tree in Massachusetts is the buttonball tree. It's huge. It's huge. All right, that sounds to me like we need to stop shipping our trees overseas. No, we need to find more buyers of our trees overseas so that our logging operations can continue to produce this wonderful agricultural product called trees, right? And send them it's timber, right? It's just like any other farming product. Like, people don't consider trees an agricultural product like any other farming product, like corn, right? It takes longer to grow a tree, but it's a tree farm. That's exactly what it is. It was planted there to grow, to cut down and sell. Like, we want buyers for it. We want to ship trees out of the United States. That's an agricultural product. That's a manufacturing product, right? Let's get it out of here. But it's difficult to see that as being like as a need, but it is. Alrighty, guys, I have but 10% left on my phone, so I'm gonna give it like another 3 minutes here. We'll take it to an hour and 25 and we'll call it quits. But this was awesome. Thank you everybody who stuck around. We got 183 people watching with 123 likes. I gotta go get some gas for my neighbor too, because he gave me a gas can that I had to go fill up and I never did. So, and he's over there mowing right now and I'm sure he's wanting fuel. All right, open up public lands for mining is another Trump administration goal. The borderlands in Minnesota are target for the Chilean mining company owned by family close friends with Trump. All right. Oh, most of America isn't utilized. Housing will be built throughout the country. Fancy woods they use to make guitars are interesting. Alder, cedar, spruce. Let's see here. It says, Justin, I know so many people who are one missed paycheck away from going below broke. It's sickening. Yeah, that's a lot of people out there. We already read that one. Time, energy, water, home for animals, trees are very important. Yeah, they are. Alrighty, guys, this was a lot of fun. We'll call it quits now. We got 164 people who are watching with 125 thumbs up. Thank you so much for hitting that like button, getting the YouTube algorithm to grab this video. We got $32.37 in super chats. Thank you so much for being so supportive of the channel. I cannot tell you how much I thank you, how much the family thanks you, and how much you have been supporting the channel for all these years. We're going to keep going for it. We're going to keep sticking to it, sharing the credible threat theory, sharing the ideas of what it is that the average everyday person can use this information to do, or use it in their life so that they can make the best, most appropriate decisions. This is how we do it, man, is having the conversation. So I thank you guys so much for being here. Thank you for joining the school community. Thank you for downloading the credible threat theory and sharing it with all your friends. Uneducated Economist, you let me know.